Hello and happy week 140. Right now we're November the 8th, Tuesday, November the 8th. And thank you to the commenter who suggested that I actually add these dates because it's very helpful versus week 140. So, what is happening this week? And I really wanted to talk more about people who are timing the market. And honestly, I'm not here to tell you you should buy, you shouldn't buy, you should sell, you shouldn't sell. But listen, if you've been watching me for long enough, you know that I'm not an advocate of selling, more so an advocate of buying at all times, no matter what. Because long term, we all know what the result is likely to be. But more so, I wanted to focus on the people that are trying to time the market, where there's this, perceived bottom. Um, you know, is this the bottom of the market? Do we know this, if this is the bottom of the market? Have you seen a bottom of a market before? And what did you do when that bottom happened before? And that's really the premise of this week's blog post and market analysis, is to look through what we've come through and where we are today. And if you're new here, we've been doing this for 140 weeks in a row, starting when COVID began in March of 2020, and have continued every single week until now, November the 8th, 2022, to help you spot micro trends in the market that might be being missed by some other people and definitely being missed by the general media, who are usually reporting monthly sales data after it's usually fairly irrelevant. So right now you're going to get a lot of reports of October figures this, October figures that. But October was 8 days ago. And right now, what really matters and what always has mattered is what is happening every single week. So that's why you should subscribe to this blog. That's why you should become a real estate raccoon versus, this real estate bear or real estate bull talk. We don't really subscribe to that day trader mentality here. We're all scrappy real estate raccoons who make really smart decisions every single day using the data in this blog. So this week, I wanted to show you what happened sort of at previous bottoms. So if I open up the blog here, you guys can all clearly see. Just have to remove some things out of the way here so we can all see this together. So what does the bottom of the market look like? Number one, I wanted to quickly talk about the sales. Sales have fallen off a cliff again. We had this same number, 32 sales, this exact same number about 4 weeks ago. Well, it was Thanksgiving week. That Monday that we didn't have in the week seemed to really affect the market. This past week, really, for some reason, buyers there was no special announcement. There was nothing really noteworthy to remove even more buyers from the market last week. Perhaps some sort of fears around the increased foreign buyer tax to 25%, but that's nothing really crazy because we all know that the Toronto real estate market is not propped up by foreign buyers like some people would like you to believe. That unnamed overseas corporation is not the one you're competing against when you're trying to buy your favorite house in your favorite Toronto community. But again, sales really did take a serious free fall week over week. They're already low, but now we're talking like deep holiday season kind of low again. The only time it was lower was back in January. Now, back in January, if you look at what I wrote here, that would have been week 98. Looking at the stats back in January, where we had literally nothing on the market, months of inventory at 0.43. What that means is in January, it would have taken less than 2 weeks to sell all of the properties on the market if no new listings were added. So not that, 24 sales at that time was not reflective of decreased buyer activity. Buyers just didn't have anything to buy. So we're looking at 0.43 months of inventory then, and we're looking at 1.78 months of inventory now. We have nearly triple the amount of inventory on the market, or more than triple the amount of inventory on the market, a slight bump from last month. But what's really important, and one thing I want you to always be paying attention to, is the fact that even with these decreased sales numbers, listings are not piling on. We've been hovering around this 500 mark for houses for a while now. The big difference here, look at condos. We're at 1,584 condos. That's about 30 to 40 fewer units on the market now than there were last week. So again, nobody's panic selling, that we know. But last year, imagine this, only 623 condos for sale. So last year, when I was begging anybody that needed to sell but had a condo or a house that had some sort of quirk, something that would have made it more difficult to sell, January, February, that was the time to sell that property. Now is not the time to sell that property because with condos, we've got almost 1,000 more units on the market. But Speaking of the bottom, let's talk about the bottom, the previous bottom back in November, week 37. Now, excuse the formatting on this page, but this was, we made a website change, so it messed up some of the formatting. But take a look at this. Similar number of house listings, but double the amount, more than double the amount of house sales. But look at how many condos were on the market at the time. This was November 2020. This was also when the city of Toronto decided it was a really good idea to crack down on Airbnbs, essentially making it impossible for you to Airbnb a property that wasn't your principal residence. So a lot of Airbnb investors had their properties on the market at this time as well, hence this figure here. But look at the months of inventory back in November of 2020. 5.31 months of inventory versus right now we're sitting at 2.25, which is up from 2.15 last month. We have had a steady increase of supply, but not necessarily because of the number of properties on the market. I know that sounds silly, but I'll explain why in a second. The active listings number has stayed relatively the same. What's changed is the number of sales. So we have 65 this week, which is lower than what we've had in previous weeks as well. But even in this down sort of bottom of the market, so to speak, November was the bottom. And my question, I guess, to you at the time, did you buy? No, because you were still scared. You didn't know how much further it was going to go. That's why it is silly to try and time the bottom of the real estate market. So even with 113 sales, this number of active listings, months of inventory at 5.31, aggressive buyer's market. You could have had deals all over the place in condo land at this time, but you probably didn't because you were terrified. You had no idea what was going to happen to the market. And it's the same kind of feeling that some people have right now. But let me tell you who doesn't have that feeling. Investors, people who are comfortable with a little bit of risk and understand that a little bit of short-term pain might happen, but long-term gain is 100%. I shouldn't say 100% guaranteed because that just sounds too, there's no way to prove something like that. But in the past, investing in Toronto real estate long-term has most often worked out to the buyer's benefit. So again, we are not in a situation where we're at where we were in November, and I don't suspect we'll get into another November type of situation again, unless people start to panic sell, unless we have all of a sudden week over week gains in active listings, which if it hasn't happened by now, how many rate increases have we had? A lot, right? We have one more coming in December. Like, unless that December announcement is some sort of crazy monster rate hike, I do not expect any changes in active listings. I do expect some sales to pull back again, but that again will be temporary. As we head into 2023, I am very confident that we will see some downward pressure on rates. And as the pressure comes back on rates, we will most likely be in an environment with improved buyer sentiment. And as buyers' mentality improves, as they get more comfortable jumping into the market, they're going to start buying. And I think I asked this question last week, but I'll ask it again. Do you think that buying now, when most people aren't, is better? Or do you think that buying when everybody else starts buying is the better strategy? I mean, I don't think you need to be a genius to figure that out. Buying in this market, when there are fewer buyers, less competition, and better prices, is obviously the better solution. So, that being said, moving on from these numbers, hopefully you understand kind of where we were and where we are now. And what's really interesting to me is that condos have been more stable than houses overall. This massive peak that we had here in January and February, where the average price of a house in the urban centers of Toronto was hitting $2 million. We're probably not going to see that again until 2024 or beyond. But looking at the condo line here, both median and average, despite a few blips here and there, has been relatively stable. And who knew that after all this hate on condos over all of these years, being called boxes in the sky, valueless shitholes, whatever else you want to call them, and everybody just wanting that house, the darling of Toronto real estate, well, it turns out that condos were the more stable investment overall. And they're proving to be the more stable investment right now with less price fluctuation, and some more buyers in the market than we might think, just because mainly condos are more accessible in terms of their price point, as even the entry level house today still will cost you roughly $800,000 and need a whole bunch of work on top of that. If you want turnkey, the average house you're looking at is probably going to cost you a little bit more. I actually just realized I wasn't sharing my screen. So back to this, if you look at this chart right here, you will see that condos were generally more stable right here. And you can see that dip of November kind of running right through until around January, until prices start to really come up again around here when supply was down to historic lows like I've never seen it before. But again, you'll see where we're at right now, which is roughly where we were at around these highs over here, despite some unnatural little anomaly weeks over here. And something crazy happened right here. I don't even know what's going on right there, but we had some pretty massive condo sales that affected the average price, which is why I like to look at the median line more often. So looking through, what else are we talking about today? We talked about the bottom. Yeah. So, I mean, why do you think you didn't buy back in November of 2020? I mean, there's a pretty clear answer to that. It's because you had no idea what was to come. And that's always the thing. You have no idea what's next. We have no idea what's around the corner. We have no idea how big the rate hike is going to be. The only thing that we know for certain, I guess, is that the market's going to be okay eventually, especially in a place like Toronto, where you have major companies doubling down on their office space, doubling down on their presence in Toronto, attracting high earning employees who are looking for quality housing in most of the urban centers and along subway and transit lines. Of course, Kingston Road is an area that I've been talking about a lot, but there are a couple of neighborhoods that actually did pull back in supply. So looking at, again, the Leaside, Davisville, Yonge, and Eglinton area, their months of inventory numbers actually came down when most other communities were doing the exact opposite. 2.49 months of inventory versus 2.61. A small change, but down nonetheless, reflecting the low number of sales even. So really optimistic about those midtown markets. Birchcliff has been something we've talked about over and over and over again. This is that area east of the beach, a little north, Victoria Park to Warden. In that little pocket, Lawrence Park East, some people call it, which I think is hilarious, but super silly. But right now, under 1 month of inventory in Birchcliff, which is something that we haven't seen there for a little while, and not down just a little bit, but down substantially. So again, like I said at the very beginning, you can either be, pessimistic about this market and lose, or you can and focus on what's happening now and make long-term decisions based on short-term happenings, or we can be that real estate raccoon who's going to always focus on the long term and make smart buying decisions right now. Rates were going to go up again in December, and we know that. And if you haven't watched my video on YouTube with my daughter, she had some really interesting insights. So please make sure you go ahead and watch that. But another area that saw some decreased supply is the Kingston Road and Highland Creek area, all the way up Kingston Road east of Birchcliff to just before the Port Union exit on the 401, basically where Pickering Toronto border is. Another area that I've been incredibly excited about for over a year now. I, in fact, moved my family up in that area, dropped back in supply as well. So this is why it's super important that when you are, get my face up here again, that when you're doing your research, you are understanding what data you're looking at. Are you looking at GTA 416? Fine, to give you an idea of how the market is in general, but it's not going to help you understand how you should approach a property you're interested in offering on, and what type of offers you should consider if you are listing in a market like that. Our numbers are very specific to very specific communities that matter to people that live in those areas, and they matter to your bottom line, which is why these weekly, super narrowed down micro reports are so valuable to you if you live in any of these areas. So the one thing I want to make sure that everybody understands is, let's not wait for good news to start buying, because that's when everybody else starts buying. Let's make these purchases when other people aren't, to avoid the competition, to get the best prices and leave yourself big room for negotiation. And that's something we're advising all of our clients right now, is if you're making offers, you can start conversations with really low offers right now that wouldn't have even been entertained by sellers before. Doesn't mean you're going to get that low offer accepted, but it's going to start the conversation now where it didn't before. So hopefully you will take this advice, do what you will, and go out there and make some really smart real estate decisions. If you are a client of the Spring Team, you're going to receive an email in the next couple of days. We're giving away Christmas trees, custom wreaths, and you're going to be able to take a picture with Santa Claus. December the 3rd is when we're doing that event. So if you are a client of the Spring Team, look out for that email. If you want to be a client of the Spring Team, I want to hear from you. Comment, email. My contact is very easy to find. Just Google my name, the Spring Team, or you can just call 416-434-1511, and I will help you out. We've got a team of 12 to help you knock it out of the park. So let's close out week 140 with hopefully some optimism, some open-mindedness, and buy smart out there, everybody. Real estate raccoons out.